UiPath is scheduled to report quarterly financial results on December 3rd, 2025, and investors are asking me if they should buy this stock before the company announces that huge investor update. I'll answer that question in this video, and I'll share with you what you should look out for from the company in the upcoming earnings release. So let's start with what you should look out for from the company that's reporting increasing annual recurring revenue, up 11% in the most recently reported quarter, up to $1.7 billion. Revenue overall was up 14%, and dollar-based net retention came in at 108%. Now remember, dollar-based net retention measures how much a customer spends in the second year compared to the first year. 108% means customers are spending 8% more in the second year of service compared to the first year, which is an indication of a good customer value proposition. Otherwise, customers wouldn't increase their spending with the company. They would decrease or cancel and move on to something else. Operating income of $62 million and cash flow from operations of $42 million is expected to improve in the upcoming quarter. Management is forecasting annual recurring revenue of $1.771 billion in the upcoming quarter and operating income of $70 million. If the company hits those targets, the operating income figure would be up $8 million from the previously reported $62 million. For the full year, the company is forecasting $1.834 billion in annual recurring revenue and non-GAAP operating income of approximately $340 million. So far in the 6 months ended July 31st, 2025, the company's cash flow from operations increased by roughly 10% to $160 million. That's up from $146 million in the same period last year. Remember, the company's founder returned as CEO and has since undertaken a significant improvement in the company's performance. That's what has investors excited recently about UiPath stock. So I updated my discounted cash flow valuation model today, which increased the intrinsic value per share by roughly $3. I now calculate the intrinsic value per share of UiPath at $20.40. That's compared to the current market price of $13.61. So when measuring by my proprietary discounted cash flow model, the stock looks undervalued. Furthermore, when I go to fiscal.ai, which is my preferred data provider, to retrieve the company's forward PE and forward price to OCF multiple, it looks cheap on these valuation metrics as well. On a forward PE basis, UiPath is trading at 19.5. Click the link below to watch the full video.